So you're ready to get started you first need that was a lot of tongue tying right there. So what are some of those fundamentals? What the So today I'm wearing this cool shirt by Earn Your Leisure. Shout out to the EYL Club. They're a cool organization that definitely focuses on people of color and getting into the investment landscape.
This episode, we're going to talk about everything from gentrification, real estate investing, day trading, a lot of different stuff.
There's some pretty solid brothers, so they sent me some good old merch, and thanks guys. So now that you're ready to start investing, here's what you do. Let's start off with a few steps. The first step is set up an account. Now, I typically recommend using a retirement account, aka an IRA. It's easier. You don't have to really worry about all the capital gains tax, and on top of that, you don't have to worry about, say for example, hey, do I have to consistently pool and all this other stuff? It's just simple. It's your retirement. You're investing for the future. Now, if you want to do anything a little bit more advanced, that will come later on in the series. But today, it's all about just the simple things and getting started. All right, so there are two types of IRAs. One, traditional, the other one, Roth. Now, what makes them different? On one side, you pay the taxes of whatever it is that you're depositing into your Roth, you pay that early on. The other one, you just pay it later. So it's pretty much a matter of pay now, pay later. Now, one of the beautiful things about Roth accounts or traditional IRAs is that you don't have to worry about any of the capital gains tax as you invest. And when it comes to income tax, the only time when you really have to worry about that is when you decide to make your withdrawal in the end. But outside of that, have fun, go mad. So now that you have an account, step number 2, research. Find out what makes them a good company. One of the things that I always tell folks is, always look at the fundamentals. How is their cash balance? Do they have money or do they not? If they don't have any money, but yet they're still in business, then that means that they're probably struggling. Now, if they do have a strong cash balance, that's good. If they have cash sitting on the sideline, that allows them to invest in things as a company themselves. So what can they invest in? They can make better products by spending the money towards research and development. They can make acquisitions or merge with other companies that are a little bit smaller and then grow the business or a specific division within its business that will ultimately scale the company to even greater heights. See, it's those types of things in which that we look at and say, that's a strong company because they have, what is the second thing? Vision. Do they have a vision to take the company from where it is today to, say, for example, 5 years, 10 years from now? What will the industry, what will the sector look like? I was getting ready to do a buzzword. Don't do a buzzword. Keep it simple, keep it basic. Outside of the fundamentals, we also look at how good is where is the company's vision going to? In the next 5 to 10 years, where will the company be? Will the company still be stagnant or will it be in a completely different stratosphere? And as investors, we really, really care about those things. Why? Because if they're pushing the company to go into a whole different space at a whole new level of scale, that's going to be great for the stock because we as investors, we love that. The more that you continuously gain value or build value, that's strong for us because that's what we like. We like returns, and bigger growth means greater return. Got it? So we look for the social impact in a company. Why does social impact matter? Because it's a global economy. When we look at a company like an Apple, for example, we see a company that's a global brand. They outreach to pretty much every arena, every inch of the earth. And why does that matter? Because not only are they a transcendent company where they sell great products, but they're also moving into an area with those products and bringing in service. So again, there's your social impact because a lot of folks have invested into it because they understand the quality of the company. And then they're investing into it because of the fact that they know that it's something in which that's going to work. So for us, the investor, that's a solid investment. Where you take in those other few pieces that I had just mentioned, that will help you decide whether or not it's a company that you want to invest in. Dre, bro, we hear you snoring. So think about it. Think about investing into a company, like for example, going on a journey. Once you've reached that journey with the company and you've gone as far as you can go, that's typically when you're going to cash out of the position. I would say the last piece for you to get started and in your investment journey is after you've done the research, you set up the accounts, you bought the stock, the very final piece is continuously learn. Continuously learn about the company, continuously learn about their competitors, continuously learn about, for example, what the industry looks like. Because when you get that kind of pulse, now you develop some form of an edge. And we as investors or as traders, we love an edge, which leads to the final piece that's ultimately going to carry you over in your investment journey and getting started. Having a plan. Now, everybody's plan in being an investor or starting to invest their money, everybody invests their money for different reasons. They all have different plans, they have different strategies, they have different goals. So you yourself, I challenge you to write out what your goals are, what is it that you want to accomplish, and where do you want your money to be? And then you track that as it pertains to performance of your portfolio. If your portfolio is starting to show, hey, I'm not performing at the caliber that I should be, then this is where you, the investor, kind of like a gardener, you start to notice that some of the leaves are not as strong or they're dying off. You just trim them. And as you trim them, you find something else. And so if a company is not performing at the level that it should be, then you trim that company, take profits, or sometimes you'll take a loss, and then you'll find the next investment. These are all the things in which getting started as an investor, they're very, very basic. They're very, very simple. I'm not here to give you something super duper technical today because we're just getting started. And this is going to be quite the journey throughout this series of the Come Up, where we're literally going to take you through and continuously, as you've made that investment, we're going to help you understand why you've made that investment. And each tool that we give you in a video will literally only just make your experience as an investor richer. Why? Because we'll be teaching you fundamental concepts that every investor should know that you'll be able to get right here. So if you haven't made the investment yet, of course not, because you're here. So after you finish watching this video, you're going to head on over to your favorite brokerage. Oh, and what are those brokerages? Glad you asked. You have E-Trade, you have Fidelity, you have TD Ameritrade, you even have Robinhood, which I don't really like Robinhood because of the fact that they're not as big enough as the other guys and they're not as consistent. But they do provide some pretty good tools. They give you some good news features. And on top of that, they help you understand what you're doing. But whereas the bigger players, they help you do, say, for example, actual testing. So for example, you can actually test an investment and see how well it does without even having to put any money into the account yet. All right, so let's do a quick recap. You set up an investment account, or IRA. Then you educated yourself on what are some of the fundamentals, what are some of the key things to look at, and also its social impact. Third, of course, the easiest one, you bought the position or you bought the stock. Fourth, and the final piece, you continuously set up that loop where you're constantly doing more research, more learning on your investment, as well as other potential investments. These are solid things in which that will help you get started. If you like what you saw, go ahead and hit that thumbs up button. If you have a question, go ahead and drop it down below. If you want to follow along with us, go ahead and hit that subscribe button. And also, if you want to be a part of the notification squad, aka the Cool Kids Club, go ahead and smash that bell. Until next time, I'm Mark Monroe, and this has been your Come Up. Peace.